From the News Channel 5 network, this is Real Estate Real Talk with your host, Realtor Christie Wilson. Sponsored by the Wilson Group Real Estate Services.
Good morning and welcome to Real Estate Real Talk, Nashville's only live call-in real estate show, where we invite you, the audience, to call in with any question you may have regarding real estate. Our call-in number is 737-7587. My name is Christie Wilson and I'm your host of Real Estate Real Talk and also president and owner of the Wilson Group Real Estate Services, who sponsors Real Estate Real Talk. We are a full-service real estate agency with 25 full-time agents as well as a property management division. So if you need any help buying, selling, investing, or managing your property, give us a call at the Wilson Group or check out our website, wilsongrouprealestate.com. Our call-in number at the office is 385-1414. And also feel free to like us on Facebook. With me today on Real Estate Real Talk is a repeat guest who was here about a year ago, and we had such a good time. It was so informational, so interesting. I am so grateful that this gentleman has come back to be a guest. And with me today is Mike Holton with Newcastle Mortgage. Good morning, Mike.
Good morning.
Thank you so much for being here.
I appreciate the invitation.
Well, we are going to talk about reverse mortgages, and that is Mike's specialty. That is his company. And so before we jump into the meat of that, tell us a little bit about you. And
well, we started this company about 7.5 years ago to purely specialize in the reverse mortgage products. We thought that it was definitely going to, at some point in time, take off, which it has. It's gained a lot of popularity among realtors, utilizing it for purchase, and for financial planners, utilizing it as a supplement to a total financial plan. So we see this market getting bigger and bigger, and a lot more people becoming involved in it. Very happy that we made that move those years ago to specialize in the reverse mortgage.
Good. Well, I cannot wait to learn more about it, because when you were on last year, I had so many questions because I know so little about it. You know, you hear, and I know you're going to dispel any rumors or myths about it in our conversation today, but you hear snippets of stuff about it, and I think a lot of people don't have the right information.
That's absolutely correct.
So it'll be a great show. But before we get into that, I want to thank Farmington Bank now, or Farmington Mortgage, who is a part of Capstar Bank, for being one of our sponsors of Real Estate Real Talk. If you were thinking about buying a home or refinancing a home, call Farmington Mortgage, their name just changed, and speak with Billy Hamburg. And you can reach Billy at 690-5100. Rates today on a 30-year fix are somewhere in the 4.375 range, and on a 15-year fix you're at about 3.375 as well. If you're looking at investment property, you can always plan on tacking another point on there and anticipating a 20% down payment. But Billy can answer all of your questions. Again, you can reach Billy Hamburg, 690-5100. A lot going on in the real estate market. We will next week probably have numbers for you from March of what's happened in the month of March. January and February have both been up overall in our home sales. Interest rates have remained steady. We anticipate that to continue. I read something yesterday that interest rates should stay very steady through 2015, so that bodes well. And inventory still is a bit of an issue. There's just not a lot on the market. So make sure you are working with a full-time realtor who can help you with all of your real estate needs, find homes for you that may not be on the market yet. And I tell you, the best agents in the city are at the Wilson Group Real Estate Services. I know this for a fact because I work with these ladies and gentlemen every day. So if you're looking for one, give them a call. But now I'm so excited to talk to Mike Holton about what's going on in the reverse mortgage industry. So tell us what a reverse mortgage is, Mike, and how it works.
The typical reverse mortgage has been primarily used as a refinance to take the money, the equity that you've got built up in the house, to turn it into cash that they can utilize. The borrower needs to be at least 62 years old to participate in the program. They do have to have a little bit of equity. They're able to get somewhere in the neighborhood of about 55% of what the value of the home is. What we usually see is that they are utilizing it to pay off their current mortgage. And you know, we're always trying to, okay, what do you owe? what's the house worth? I mean, we can determine very quickly if this thing would be able to work for this individual or not. But it's just an easy way for them to be able to tap into that equity, to utilize it for paying off the existing mortgage, any other debts, create a flow or a source of funds on a monthly basis. You can set up a line of credit so that it can be drawn from as needed. It's just a very, very flexible tool.
Is it based just on the equity of the home or the overall value of the home?
No, both are, well, the value in relation to the mortgage balance. So it kind of is equity in that way in terms of a percentage.
Okay.
Like I mentioned, somewhere in the neighborhood of 55% is usually what most people are able to get. So if you've got $100,000 value, you'd be able to borrow somewhere in the neighborhood of $55,000. As long as that's enough money to pay off that existing mortgage, then we can resolve that debt. And the unique thing about the reverse mortgage is that they don't have any payments for the duration that they continue to live in and occupy the home as their primary residence.
So the likelihood of them outliving the mortgage is slim.
They're not going to, as long as they can remain in the home. That's the trigger point. If they have to go into a nursing home permanently, or if they pass away, then the clock starts ticking, with the lender to take care of handling the debt at that point in time. What happens is, I mean, just like any loan, there is a loan balance. So when this individual dies, passes away, or moves away, they're going to look at it and they say, okay, you owe X amount of dollars. Mm-hmm. Now that's where the options kick in. They know how much they've got to get. So the lender knows what that debt is. Okay. So it becomes posted. The borrower or his heirs will look at it and they say, well, this debt, because of the nature of the reverse mortgage, has increased to where maybe it's even worth, that it's more than the value of the home. Now, I'm kind of putting that first. I should have put the other way first. If there is equity there, in other words, if that loan amount to be paid off is less than the value of the home, then the borrower or his heirs sell that home, retain the equity. So, it's, but now if that value has increased to where it's more than the home is worth, the very, very strong protective feature about the reverse mortgage is it's considered a non-recourse loan. That means that those heirs or that borrower will never be responsible for paying any more money than what that house is worth. Okay.
We're going to go to the phones. I want. This is so interesting, and because it's so different from what we usually do on the real estate side when we're helping somebody purchase. And I know we're going to talk about that too. But let's go to the phones. Okay. And we've got Mary on line 1. Good morning.
Hi. Good morning. I have 2 questions for you today.
Okay.
The first one is, my parents are thinking about doing the reverse mortgage in their home. My father will be 62, but my mom will be 58 when that happens. Is that possible, or both of them have to be over 62? That's the first question. The second question I have is, let's say they do the reverse mortgage, they pass away. What happens to the house? I know that for what I understand, we do have the option to sell it and repay the bank. Otherwise, what happens if we cannot sell it?
All right, let me answer the first question first. Lenders frown on pulling people off title. It has been done quite a lot over the last 20 years. If there's one individual that is underage, but it has led to some difficulties. Matter of fact, AARP has sued HUD for the same thing and won for bringing someone off title. There are a couple of lenders out there that will still do that, enabling one person to only remain on title in order for them to be able to do the reverse mortgage.
Okay.
But what we're seeing is that even within the next few months, HUD is going to release new guidelines that can actually accommodate those underaged borrowers. There's going to be a reduction in the amount of proceeds that they'd be able to get, but at least it could still make the thing work if that's what the borrowers wanted to do. So we don't encourage people to come off title. It does happen in the event maybe somebody is getting ready to face foreclosure, and this is a good method. We do it, we go through the proper steps, but we don't really encourage people to do that.
So in Mary's case, if the dad's 62, the mom's 57,
right,
just wait 5 more years?
Well, 3 options. Either go ahead and do it by removing the 57-year-old from title and only the 62-year-old, or you can wait till she's 62, or within a few months there will be a new addition to these programs that will accommodate someone who is younger than 62, but it will come at a cost.
Got it. Meaning points up front or something?
No. It would just be in the amount of proceeds. Like I mentioned, that they're able to get maybe 50-55%. Maybe now it goes down to 45 to 50. And none of that has been laid out.
Sure,
so we're just speculating.
Okay. And then the second part of your question, Mary?
The second question, basically what happens when the loan ends. There is a principal balance that will be due on the books from the lender. The lender is going to say, well, you can sell the house, pay us that amount of money, and keep what's left for your own proceeds, or the non-recourse feature with the reverse mortgage will never let that house be priced at higher than what the appraised value is. So the family member or anyone else can come in and buy that house at the appraised price, even if the value of the loan amount has far exceeded that.
Interesting.
That's the non-recourse feature.
Okay.
The other thing is, if it's very obvious that, let's say you've got a house with a loan balance of $150,000 and the house is worth $100,000, okay, the term deed in lieu of foreclosure, where that family or that borrower can actually return that home to the lender, and there's no consequences. I mean, it's written into the agreement. So they basically turn the house back over to the lender, and even if it's $50,000 upside down, it doesn't matter.
Interesting.
It's very interesting.
Huh.
That alone is the strongest feature, besides the fact that you don't make payments during this period of time, that you're never ever going to be overextended on this house. So it's
nor
a win-win.
Nor your heirs.
Nor your heirs. And it's a win-win situation. If there's equity there, the borrower or his heirs can get it. If there is no equity, and as a matter of fact, if there's negative equity, here's the keys. Thank you. It's been real.
Wow. Michael, we're going to go to a quick break. This is very interesting. Can't wait to continue the conversation on Real Estate Real Talk. So please stay tuned, and we will be right back.